Our special guest this morning is the chairman and CEO of Berkshire Hathaway, Warren Buffett. And Warren, we've talked about a lot of things this morning. We got briefly your thoughts on the markets, but there's been a lot that's happened in the markets since the last time we sat down with you. Volatility is back in a big way, and that has the average retail investor kind of questioning what to do at this point. It's scared a lot of people. What do you think's happening right now, just in terms of the return of volatility? Is it something to be worried about? What's causing it?
When people talk about the top investors ever, Warren Buffett is a name you hear a lot. Every year, after the big meeting at Berkshire Hathaway, everyone who cares about money, and even more about how not to lose it, listens really closely to what Buffett says. They want to learn his tricks for making money. This year, everyone was really interested in how much cash Berkshire has saved up. It looks like Buffett might be getting ready for some big problems in the U.S. economy. If someone as smart about money as Buffett isn't spending his cash, it might mean he doesn't see any good chances to make money right now. Berkshire Hathaway has a huge amount of cash, about $189 billion. That's a lot of money, and it makes sense that people think that Buffett believes the stock market is too expensive and going to crash soon. With 500 big companies in the S&P 500, it's pretty surprising that he can't find even one he wants to invest in. This huge amount of cash he's sitting on makes a lot of people think about what he thinks will happen in the market. But here's an interesting part. That $189 billion isn't just stuffed under a mattress. It's actually put into something called short-term U.S. Treasuries, and right now, they are making about 5.4% interest. What's more interesting is that Buffett said even if he only made 1% in interest, he would still keep his cash. This shows he's being very careful with his money because he's worried about what might happen in the market soon. So this makes us wonder about what's really going on. If Buffett is being this careful, maybe some big problems are coming that we don't know about yet. It's like when someone really good at predicting weather starts carrying an umbrella everywhere, it makes you think maybe you should be ready for rain too. Buffett's choice to keep his money safe instead of investing it might be a big sign for all of us to think about where we are putting our own money. This whole situation has everyone talking and watching Buffett's next move. It's a big deal because his decisions affect so many people's investments in the overall economy. If he's nervous about the economy, maybe we should be too. After all, he's made a lot of money by being right about these things before. So now, everyone who cares about their money is trying to figure out if they need to be as cautious as Buffett is being right now. Warren Buffett's hesitance to spend his huge stash of cash has made a lot of people think he's expecting the market to take a big tumble soon. He's not the type to shout from the rooftops that a recession is coming, but his careful moves are often a hint of what he believes is on the horizon. Back in 2001, Buffett brought out a tool called the Buffett Indicator. This tool looks at the total value of all publicly traded companies in the U.S. and compares it to the country's GDP. Right now, this indicator is at 199%, which suggests that the stock market is way more expensive than it should be. When numbers get this high, it usually means trouble for the market is coming. At Berkshire Hathaway, where Buffett calls the shots, they don't try to guess exactly when a recession will hit. They keep an eye on how pricey the market is and wait patiently for a better time to invest their money. Buffett knows that eventually the market will adjust itself, fixing these high prices and making it a good time to buy again. He's not rushing to spend his cash because he sees that the market isn't behaving normally right now, and he expects things will have to shift eventually. During Berkshire's big yearly meeting, Buffett opened up about why they've got such a big pile of cash. He says it's not because they're chasing after higher interest rates, but because right now there just aren't any good places to put that money. This careful strategy shows that Buffett is bracing for some tough times ahead in the market. He's playing it safe, waiting for the moment when prices come back down to earth and real opportunities show up. Buffett's cautious approach makes a lot of sense. Investing isn't just about jumping in at every chance, it's about knowing when to step back. By holding on to his cash, Buffett is making a clear clear statement that he believes the market is too risky at the moment. This isn't about missing out on small gains, it's about avoiding big losses when the market inevitably corrects itself. So what does this mean for everyone else? Well, when someone as successful as Buffett shows signs of worry, it's a good idea for other investors to take notice. It's like when the calmest person you know starts to get nervous, it's probably a sign that you should be paying attention. Buffett's actions are a reminder that sometimes the smartest investment move is to hold on to what you have until the storm passes. After all, the goal is to make money, not to gamble it away on risky bets. Another thing that really shows the market might be too expensive is the 10-2 Treasury yield curve. This curve has been flipped for over 630 days, breaking the old record from 1978. When this happens, short-term bonds pay more than long-term ones, which usually means people think there will be tough economic times soon. Many people who invest in Berkshire think that Buffett isn't too optimistic about the market, even though he hasn't said it out loud. Bill Smead, who's the big boss at Smead Capital Management, said this is the gloomiest he's ever seen Buffett. He pointed out that Buffett has a lot of cash and even sold some of his Apple stocks, which makes it seem like he's waiting for prices to drop a lot before he buys anything big. In a talk on CNBC, Smead said that Buffett is probably just waiting for the next big drop in the market to use all that cash Berkshire has saved up to buy cheap stuff. He thinks Buffett isn't jumping into investing right now because he feels the market's prices are too high for it to be worth it. Instead, Buffett hangs back and watches for a better chance to come along. Buffett's plan isn't about guessing when the next bad economic time will be. It's more about seeing that the market's prices are too high right now and just waiting for the right time to buy. This method has worked well for him for many years, which is why so many investors listen to him when times are uncertain. The way things look right now, with stuff like the Buffett Indicator and the flipped yield curve, it looks like we could be heading for a rough patch in the economy. Buffett being careful and keeping a lot of cash shows he thinks the market's too expensive and that there will be better chances to buy in the future. Warren Buffett hasn't come right out and said a recession is on its way, but his move to hold off on investing kind of screams that he thinks rough times are ahead. He's super smart about these things, always playing it cool and watching the market like a hawk, showing that sometimes you just gotta wait it out when things seem iffy. In 2023, there are a few red flags waving that suggest the US might be heading for some money troubles. First up, our national debt has shot up to $31.4 trillion by the year's end because of all the cash that was dished out during the pandemic. That's a massive pile of bills to pay off. Then there's the Fed, messing with interest rates to try to keep inflation in check. They're walking a tightrope though, because messing with interest rates could accidentally kick off a recession. Let's talk about houses. Home prices have been on a roller coaster, climbing about 24% since the start of 2020, thanks to super low borrowing costs and not enough homes for sale. This has a lot of folks worried about a housing bubble popping like the one back in 2008, which could slam the brakes on how much people spend. Tech companies, the darlings of the stock market, are also in a sticky spot. They're under the microscope from regulators and their stock prices are through the roof, which could mean trouble if those prices start to tumble. Plus, the ongoing tiff between the US and China over trade isn't helping things, adding more stress to a shaky global economy. In all this chaos, Buffett's choice to keep his cash on the sidelines and wait for a better chance to invest seems like a smart move. He's all about playing the long game, choosing to sit tight rather than jump on quick wins, which is a pretty solid strategy when the economic weather forecast looks stormy. Thank you for watching. If you enjoyed this video, please hit like and subscribe for more.